Hi, I'm Brooke Thackeray. Welcome to What's Hot and What's Not for the month of August. The month of August tends to be not such a hot month on a seasonal basis. Let's dive right in and take a look. I'm going to use the Thackeray's 2024 Investors Guide and take a look at the seasonal trend for the S&P 500 in the month of August from 1950 to 2022. This is a fairly tight y-axis, so not a lot of movement on average, but every year is different. You can see a lot of ups and downs here. August tends to be the third worst month of the year for the S&P 500 from 1950 to 2022. The worst month of the year is September, so the next month on a frequency basis on a daily trading day. Not a discernible trend. Middle of the month, a few up days here, but nothing discernible. If we take a look at the sectors of the market from 1990 to 2022, you can see here that, well, this is ranked according to average gain, and this is frequency of outperformance relative to the S&P 500. Utilities tends to be the top performing sector, and so far it has performed well. But in August, it tends to perform well. Information technology is up here as well. It's being skewed by a lot of outperformance of the sector in the last few years. Consumer staples, healthcare. So we're starting to see the defensive sectors tend to be positive, the stronger sectors in the month of August. If we look here down closer to the bottom, we get into industrials, financials, materials. So some of the cyclical sectors tend to be some of the weaker sectors as well. If we look at the subsector of the market here, and we've got gold here. This is just a sampling. Gold tends to perform well. Biotech had a fairly decent month in July. Agriculture, it starts the seasonal period in September. Can start early under the right conditions. I wouldn't say that's the case this year. I do want to point out that further down here, if we look at the worst sectors, we've got auto and steel. So the auto sector tends to be a weaker performing sector at this time. So something to watch out for. If we see economic concerns or investors are to really fear contraction, the auto sector can do very poorly. I want to jump back to earlier in my book here. You can see this is U.S. government bonds, May 6th to October 3rd. You can see here I've broken this down into starting August 9th. So this is the same contiguous period, but I just put a split here to show you the relative performance for the two time periods. So August 9th to October 3rd. So this tends to be the stronger part of the seasonal trade for the U.S. government bonds. That hasn't been the case in the last few years. Look at the success rate, though, for government bonds overall in this time period from May 6th to October 3rd. It tends to be quite strong. I think the moral of the story is that we're fairly early in the seasonal trade for U.S. government bonds. They started a strong seasonal period around the start of they started to perform well around the start of the strong seasonal period as well. Look at the month of August from 1998 to 2022. The bar is the average. The cross is the median. This is the strongest month of the year on average on a seasonal basis for U.S. government bonds. We still could have some more to go, even despite the government bonds performing well so far. If we take a look at gold here, gold tends to perform well July 12th until October 9th. Still quite a ways to go in the seasonal period. And I just want to show you here that from 1984 to 2022, here's August here, and then we go into September, which tends to be the strongest month of the year for gold bullion. The cross there, the median is the highest, and also the average is up there, very close as well. So that tends to be a really strong month for gold. So here we are at all-time highs for gold, but we could see some more to go. Here's gold miners. Gold miners, July 27th to September 25th. So ends a little bit before gold bullion as far as the seasonal period goes. Strong seasonal period at this time. Let's just jump right to the graph here for the monthly performance. Look at August. This is the strongest seasonal period for gold miners on a median basis. Average basis tends to be strong, but the median basis tends to be really good. So in the right circumstances, we can actually do quite well here for gold miners. And we start to see some relative strength pick up for gold miners as well. Here's volatility. Volatility starts to increase in July to October the 9th. And if we take a look at this graph here, well, let's take a look at the chart here. You can see here that it's got quite a high success rate of increasing its performance at this time. And here's a cumulative chart showing the average performance for the volatility using the VIX from 1990 to 2022. You can see here it tends to pick up. And recently, that's exactly what's been taking place. The transportation sector tends to perform poorly from August 1st to October 9th. If we take a look at the performance here on a monthly basis, here you can see that August tends not to do well for the transportation sector on a median and average basis. It should be noted that we do see a pickup in a couple months, but nevertheless, August tends to be the worst month of the year on average. The healthcare sector tends to perform well from May 1st to August the 2nd and not perform well from August 3rd to August 11th. This is a very short time period, but if we take a look at the underperformance in this, negative performance in this time period, it tends not to be so strong. Then it tends to perform well from August the 12th until October the 24th. And we can see here that on a monthly basis, that August on a median basis is positive. September tends to be positive as well, but the stronger performance relative to the S&P 500. The healthcare sector has been performing well recently and outperforming the S&P 500. I want to take a look at some of the seasonal trends we've talked about and the securities and the performance right now. Here's the utility sector relative to the S&P 500 as well. Look at this strong absolute performance. Here we are, we're above the level we were in 2022. This is positive. Remember, August, the utility sector tends to be the top performing major sector. And here we have seen strong outperformance relative to the S&P 500, just becoming overbought with the RSI, and it is overbought with the full stochastic oscillator. We're not seeing any signs that it's starting to turn down from price momentum. We could see some further strong performance from the utility sector. Here's the gold sector. If we take a look here, and this is relative to the S&P 500. I want to show you this. Look at this. We've seen some consolidation and a breakout above that consolidation level, reaching all-time highs. This is a positive breakout for gold. We've seen a similar consolidation period earlier on, then upwards from a breakout. Maybe we get the same positive trend. We don't know, but we do have some seasonal tailwinds at this time. Gold has been outperforming recently and really has been outperforming since February, which is a good thing, but there's still more to go in the seasonal period, so we could see some further strong performance. Gold miners, if you take a look here, gold miners have actually been outperforming since February as well, or performing extremely well since February, and outperforming the S&P 500 since February. I want to point out here that really we're forming this upward trending channel for gold miners, which is positive. We haven't seen a breakdown for gold miners here. We have pulled back a little bit, but we could see the gold miners actually perform quite well. But I do want to have a caveat here. If we do see the stock market really have a big correction take place, we could see gold miners sell off and gold still be positive. And that's because investors have to raise cash for margin calls, etc. And they tend to sell off stocks indiscriminately, including some of the gold miners. So we could see that happen. But overall, this is a strong seasonal period for gold miners. Here's the VIX. We can see it's actually spiked up quite a bit. The levels we were looking at really from investors are 20. Investors start to say, oh, 20, we're starting to get above normal. That's a little bit of a concern. We're only at 23 right now. We have seen that ramp up, which is quite something. But the next level is 40. And when the VIX goes up to 40, investors will go, oh, the market's oversold, and this is usually a good time to buy. So we're still a ways away from that, but watch out. If we hit that 40 level, we could see the market at least have some sort of a bounce from there. Here's the transportation sector. It's negative for the year. It has underperformed the S&P 500. It still is not down below its low that we saw earlier in July relative to the S&P 500. It could have more to go at this point. This is the energy sector. It had pulled back since April. We're starting to see some sort of consolidation here. Concern if we break below that line here, really about 66, 67 for the XLE. And this is XLE relative to the S&P 500. We have seen some outperformance, but we'll have to watch out for this sector here at this point. Here's U.S. government bonds. Here's U.S. government bonds relative to the S&P 500. Look at this strong performance. Now, the seasonal period started right around here, so just a few days earlier, we saw that strong performance. And relative to the S&P 500, we're seeing some strong performance as well. We could see this sector move higher over the next while because we are in that sweet spot for government bonds. Here's the S&P 500. I want to show you here. We've seen this upward trend for the S&P 500. That was broken in mid-July. And so we have seen it pull back lower here. It has become oversold on the full stochastic oscillator basis, but not the RSI. The concern here is right around 49.50, or I should say 52.50. And then down to 49.50 as well. So this is the first level of support, and this is the second level of support. So this is like a support band. If we get into that band, investors could become quite uncomfortable. If we break below this level at 49.50, that's when investors will become very uncomfortable. Here's RSP representing the equally weighted S&P 500, and this is equally weighted versus the S&P 500. We don't see the same breakdown that we've seen for the equally weighted S&P 500, which is a positive thing. We have seen the equally weighted outperform the S&P 500 as well. This is a small cap sector. This is small caps relative to the S&P 500. Look at this strong absolute performance and relative to the S&P 500. Blistering performance. This was because the expectations for the Federal Reserve to cut interest rates really benefits the small cap sector, and all of a sudden we saw the investors pile in. They're leaving technology and said, well, where do they go? And so let's go into the small cap sector, which really benefit from that interest rate cutting cycle. But look what's happened more recently. We've seen underperformance relative to the S&P 500 as investors go, whoops, maybe the economic growth slowing down is going to really have an impact. And guess which sector they really hit hard? Small caps. So that's what this is about. It's going to be interesting to see if that narrative continues on. The month of August tends to be a weak month for the S&P 500. September tends to be the weakest month of the year for the S&P 500. You put the two together, they have the two weakest months of the year on a contiguous basis for the S&P 500. It doesn't mean the stock market's going to go down this time period, but this is the time period where we do see some bad stuff happens, basically, where we do see some corrections. We tend not to see strong rallies in the market unless there's been some big announcements like increasing liquidity into the markets or really cutting interest rates, et cetera, et cetera. But on average, over the long period of time, these months we don't see big rallies take place at this time. So far, August has been interesting. We're just a few days into the beginning of the month, and we've seen interest rate movements, geopolitical tensions increase, sector rotations. We've seen a big drawdown in the market. This has so far been an interesting month, and I'm sure the rest of the month is also going to be interesting. Thank you very much for joining me today.